Neither Better Trades or any of its personnel are registered broker-dealers or investment advisors. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we are discussing or illustrating. Because I consider the securities or positions appropriate to the discussion or for illustration purposes does not mean that I'm telling you to trade the strategies or securities. Keep in mind that we are not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that it is suitable for any specific person. Keep in mind that all trading involves a risk of loss, and this will always be the situation, regardless of whether we are discussing strategies that are intended to limit risk. Also, Better Trades personnel are not subject to trading restrictions. I and others at Better Trades could have a position in a security or initiate a position in a security at any time.
Hello and welcome out to another Market Insights. Start off the way we normally do with a little quote, and I have never used this one, but I certainly like it. It just hit me. And I think today may be a perfect day for it with how the market was. But the quote is, feel the feeling, but don't become the emotion. Witness it, allow it, release it. I think this fits perfectly into trading, because if we allow our emotions to take over, that becomes a problem. But one thing we have to do is learn to recognize our emotions. I think that's really the heart of this quote, is feel the feelings. Pay attention and recognize how you're feeling in the moment when the market's moving and things are trading and there's things happening with the trade and they're going against you. Pay attention to how you feel. Recognize it, see it, learn from it, figure out what you have to do to counteract it if it's affecting you negatively, and then fix it and release it and become the new reaction to the emotion. Just something that hit me, and I thought it was perfect, and especially with how the market was. In fact, let's go over there real quick. I'm going to get rid of these lines because they're pretty much irrelevant right now. That pattern essentially is gone. In fact, we could actually make adjustments to those, interestingly enough. Could probably make this a little channel. But this is, pretty spot on there. But I don't know that really matters, so I'm going to take it off. Here's the interesting part is, we get a big sell-off on Friday, a big spike in the volatility, and then today, the first basically almost half of the day, it's selling off. Tiny gap up to the upside, and then it's starting to sell off. It looks like this move is going to continue. And then by the end of the day, it's up 10. We cracked that 2,000 mark, but we don't stay below it. And then it rallies into the end of the day. And this is one of the things that makes trading challenging, is that because one of the common questions is, when do you get in? Do you get in the first hour of the market? People say, no, don't ever trade in the first half hour of the market. I don't subscribe to that. I rarely say never or always, because it's hard to say. There are times I've entered in the first hour when it looks like and it seems like things are going to continue one way. Then I'll get in if I'm willing to take the risk. If I know that 6 hours later it could be completely different and I could get stopped out and it could cost me money, and I accept that risk, I have no problem when you get in. I don't care. You can get in the first 2 minutes of the market. The question is, do you understand the risk? And today is one of those examples of, if you do get in the first part of the day, in the first hour, first half of the day, there's the risk that it turns around and takes off to the upside. Now, the funny thing is when looking through the little guys, a lot of stocks actually went down today. A lot of the smaller stocks did, at least. So maybe that's not part of the S&P, but it's hard to imagine where this is coming from. It's got to be just small pockets and the bigger players in the S&P, because it looks like a lot of the little guys, even some of the bigger guys, are headed lower. But it's interesting. So you may have gotten a whipsaw today. That's where that quote, feel the feeling. It's probably a frustrating day if that's the case. If you got into some bearish trades today, depending on which stock it is, but a lot of them are following the market, and it may have whipsawed you out, or you're upside down right now and you're freaking out because it looks like it might go up. And we do have a hammer type of pattern. So we've got to be cautious. Let's look at the rest of the markets real quick. I haven't even looked at these after the close, but I'm imagining they all look the same, except the transports. It does. It's got that hammer type of pattern, but it's got a dark body, not an open body. And the Russell's probably the same. Yeah, not much of a hammer pattern on the Russell, but huge volume day, and very easily could be considered a capitulation type of day. We'll have to wait and see. But let's see, where is that? That is, a long term, and we're talking 09, extend to the right. There's the Russell. Oh, this is a weekly chart breaking down below that trend line that's been in place for some time. Since 09, 6 years. It's a 6-year trend. And 1, 2, 3, 4, 5, 6 times it's been tested, if not 7. And right now it's breaking it. It broke it Friday, actually. And today it continued. So the Russell and transports continue to underperform the overall markets. The VIX, of course, no surprise, up a little bit first thing this morning, then sold off some. So let's get to the little guys. We'll go through those first. There's only 9. We didn't get a big ton of candidates like we did with the big guys. So we got 3 rollovers. Agilent, though, and this is I'm kind of mixed on this one. Because we've got the big, almost a pennant type of pattern, almost a flag type of pattern. You got a big push with big volume, and then the last 2 or 3 weeks, it's just been kind of dancing sideways. Big bearish engulfing pattern 2-3 weeks ago, and then we're sitting right on that $40 level. So if it breaks down from here, then obviously I'd be bearish. And part of the reason for this is we're sitting right on the 20-day. So if it breaks that, we're probably going to head lower. MACD and Stokes both looking bearish. We do have that 200-day coming in about not quite halfway to the target, so got to be cautious with that. But looking for a breakdown here. If it bounces to the upside, there's not enough move to the upside. And I guess there could be if you put it up there about 42, but I just don't know that there's enough upside to be that comfortable with it. So Abercrombie, moving on, broke down today. Similar type of pattern. We got a flagpole, a pennant type of pattern showing up, and it's been bumping its head against there, so it could go either way. And it's already outside of the entry point by 30-some cents, which is a little too much. So we'll need this one to bounce back to the upside before getting in. But with the light volume today, that's very possible. I wouldn't be surprised if the market's up tomorrow. Atmel Corporation, big gap up this morning. Lots of volume, and then it sold off. Closed back below that 872 resistance level. It's been bumping its head on there for the past few weeks, and it failed to stay above there today, even though it was up on the day. So we'll see. It's hard to say what's going to happen with this one. I mean, we never know, right? It's always 50-50. So just put the plan out there and see what happens. So Bank of America. Little Harami, little hammer type of pattern, which basically trying to develop the habit of implementing the emotional side. The hammer pattern, the Harami pattern is basically, the Japanese term Harami means pregnant or with baby. And essentially that's, we've got that small body inside the candle of the previous day, so inside Friday's day. It's in Western terms, with Western technical analysis, they'd call it an inside day. It's the same thing, basically. And it just means indecision, essentially. That's the simplest way to put it. We've got the spinning top and kind of the hammer type of pattern. It's not necessarily a hammer because the shadow on the top is too long if you want to get really OCD and technical about it. But we've got a long lower shadow, small body. The body's in the upper part of the range, and the lower leg there is more than twice the length of the body. So we have lots of different pieces going on here. But as far as the emotions behind it, the bears obviously, we gapped it up. So the bulls were excited first thing in the morning. They ran it up to, 1680, whatever the high was for the day, 1689. Then the bears came back in and pushed it all the way back down, broke through that 1662. So the bears came in and took control. But by the end of the day, the bulls had gotten excited and pushed it higher and closed it up 7 pennies. So the bulls got more excited into the close of the day, which typically tells us that it's going to be bullish the following day. And especially considering the volume. Now, if this is something you're serious about trading, and I've already shut down eSignal, and for time's sake, I'm going to leave it. It'd be interesting to look at the intraday move to see what happened and when that volume came in. If the volume came in first thing in the morning on a big gap, was it a big volume? Was it a big player buying a whole bunch. I mean, we're talking 120 million shares. So Bank of America is heavily traded, but it could be huge institutional purchase in one shot. There could be 20 or 30 million in shares in like a 5-minute span. So lots of little clues to look at. But essentially what we're looking for here is a bullish move. Moving on to Cypress. Double top, right? And we've broken through the midpoint just today, really definitively made the move today. Little tiny bit of an increase in volume compared to the last week and a half. It's only at the average bar, which has dropped off significantly compared to normal. So that is a cautionary red flag, essentially. But the break of the midpoint on the double top, pretty good clue that we're going to head south from here. The major concern I have with this one is how far it's already fallen in the last 2 weeks. The odds of a retracement, a pullback, or move back to the upside after this is pretty decent. Even though, I mean, we look back here to September when the market crashed and it dropped for about a month or so without stopping, really. It just, and that could happen here. It's very possible, not probable. So if you're scared that it's going to take off without you, then I would say maybe pick up a small position. I wouldn't take a lot of risk here because of the fact that it's already dropped significantly. So if I was worried about missing a big move like this one back here, then I'd take a small position in it. Otherwise, I'm going to wait for this thing to either settle and go sideways or bounce back up to this 984 level and do a roll reversal. That's me if I have the patience. General Motors, similar. We've got kind of a double top there up about 36.50. It's breaking below that 34.80 level. It's a little bit beyond the entry point right now, just by a few pennies. Might be enough to justify. We'll see what the action looks like tomorrow, but looking somewhat bearish on GM. Marriott Financial. Nice. Basically a hammer pattern. That essentially is a little bit more of a textbook hammer pattern. And going back and looking at the other picture, you can see a lot of indicators are starting to turn bullish. We came down and dipped, and again, just touching on the emotions of it, the bears pushed it lower during the day, but by the end of the day, the bulls had come back up. They got excited enough to take it off of the lows and push it higher. And again, we have a slightly increased measurement of volume compared to the average as of the last month or so. But compared to the last week or two, it's about average. The volume's about average. So, but definitely has a bullish look to it, especially considering we're at not only 1550, I guess, but we've got that previous drop there and it rallied from there big time. So there could be some buyers coming in here going, look what happened last time. We rallied big time. We rallied fast. So looking for something bullish there. And obviously this is going to depend on what the overall market does. PAH broke down out of that little channel. It's a $2.22 channel. Looking for a move down to about 880, which is actually a decent chunk. It's just already moved past the entry point today. Pretty solid volume the last couple days as well. I'd actually rather see this thing bounce back to the upside for a day or two and do a nice little roll reversal between 1050 and 1080. And last but definitely not least, Twitter. And this thing has bounced at this 24, 25 level, what, this 3-4 times now in the last few months. And I don't know, something just hit my mind that might be relevant to this, it might not. But Twitter is heavily driven by advertising. And you see a lot of the presidential campaigns, they're tweeting, they're doing all this stuff. And so I'm starting to wonder if this would be just like every other media outlet in an election cycle. The media companies usually do very well. They're bullish because they charge a premium for commercial airtime during the political season because there's lots of eyes on it. Lots of people paying attention. And plus they know that they will get politicians taking up airtime. So the demand will go up because you've got people wanting to run ads for their favorite politician who they want to vote for, whoever they think can win, whatever the case is. So demand goes up, prices go up with demand because supply is limited, relatively limited. And so Twitter may be able to take advantage of that and not only increase their exposure, but increase their either pricing or just have more ad revenue. because that's what they survive on, just like every other media outlet. So that may be a bullish thing for Twitter. You got a hammer pattern basically, not a lot of volume, but it's bouncing. You got the hammer pattern after it's bounced for a few days here at this level, and now the hammer comes in. That's usually a lot more bearish than having it just a one-time shot like, what was it, Host Marriott? Yeah, see, this is the first time this has hit this level, with the exception of back here a few months ago. So this is okay, but this one right here is stronger because you've got you got two hits previously in the last few months, and then 1, 2, 3, 4, four out of the last 6 days it's bounced at this level. And the bounce right here last Thursday with big volume is a very bullish sign as well. So you take all that evidence there along with the hammer pattern of today, and it looks pretty bullish. So Twitter's one that I will watch for a bullish move, especially if the market makes a bullish move as well over the next few days. Let's go briefly and see what happened with the big guys today, ABC. And this is where it becomes challenging because you look at this and go, well, man, the market was down this morning, this thing was dropping, and then it ends up closing up. I mean, albeit 45 cents, but still it gave another entry point. So, but it is what it is, and nothing you can do about those. So, unless you're waiting until the close of the market and you see the market rallying and then you jump on it. So ADSK, nothing. AEP kind of sort of triggered an entry. I mean, it hit it, and maybe if you got into it, then it's not that big of a deal because it's still a ways from the exit anyway, as far as a stop out point. Lexicon Pharmaceuticals, nice little doji. I kind of like that actually. It stayed above the 186 old resistance, so it's holding it as support, but it hasn't made a big move to the upside, so we may get an opportunity to get into this. Ambarella actually down today. We're looking for it to move up, but this may be a welcome pullback, so we'll see what happens tomorrow. Light volume, so the volume being light contributes to actually a bullish look. I mean, it's down, but it didn't sell off that hard with lots of people moving it. So Amgen, this is one of those that could have been tough today if you jumped on this on the bearish side this morning. It gapped up and then started to sell off. If you'd have grabbed it, it also looks like it either got close to or it did hit the stop today. I don't know if it did or not. Well, 58.34, so it was only 10 cents away from hitting the stop. So didn't stop you out, but we'll see what happens tomorrow. So still waiting for it to go down, basically. Anthem still looking for a break to the upside. Bed, Bath, and Beyond. Ooh, I like it. Exactly kind of what we're looking for, really. Because we're far enough ahead of this where we can see it. It gaps up this morning big time and then sells off. Very bearish. The only thing that would make this better, it would be big volume, which we did not get. Chevron, that's a challenge. Of course, it didn't break above the neckline. This is one of those, the first thing this morning, if you'd have jumped on it, you'd have gotten stopped out easily. So hopefully you didn't. But if you do, it is what it is. This is called trading. It happens. It's happened to me a lot. So Dominion not going the right direction. Data sitting right on the entry point. So still not much, not a lot of volume. So not much there. Facebook, another one where we've hit the entry point and the stop today. Gilead, this actually I like. Yeah, it's a Rami pattern. But the mere fact that it didn't get back above the $100, that blue line, what is the $100.99, so basically 101. It tapped it, but it didn't get above it. So it's still below that level. It is above 100, so it's right in that wishy-washy spot. So if it breaks to the downside, which is still $1.50 away, there's enough room there for it to take off and drop to the downside and still catch it, the entry point, and have a pretty good idea that it's going to head lower if it does. If it breaks up tomorrow, if the market goes up and this thing heads to the upside, then the entire trade, the entire pattern would probably be negated unless something else weird happened, but I'd be steering clear of it. MHFI going the wrong direction, Triple M's different direction we wanted, Merck not breaking yet. Paychecks going up a little bit. That could still materialize and be good. Royal Caribbean holding that 91.80 level, but still giving us an opportunity for a possible break to the downside. Another one that I like because if it does break to the downside, we're far enough ahead of it that we can catch it and is likely to continue if it does break. Splunk, gaps down, rallies all the way up to the entry point, taps it, and then drops. Now, as much as I'd love to believe it, the odds of actually catching that at that point, pretty slim. Probably not going to catch that unless you're just throwing orders in. And that's fine. You can do that, and some people do. Most people don't. So most people would have missed that. Ventas still waiting for a move to the upside. Western Digital made a beautiful move to the downside and broke the entry point and just continued to fall. The only thing that would be better than this would be even more volume. It still had bigger than average volume. And then last but not least, Waste Management, another Head and Shoulders that did break in the morning but then rallied by the end of the day. Looks a lot like the major markets. So hopefully that didn't sting you. Hopefully you stayed on the sidelines. That's the hard part, to see Western Digital did exactly what you'd want it to. Sold off and continued to sell off, while other ones did the exact opposite. Welcome to trading. So with that, I'm going to close up shop for the night, and we will see you very soon. Y'all have a great day. Bye-bye.